Good afternoon and welcome to the Spreadex market report for the 5th of April. After a quarter of gains, the Dow finally decided to give something back this week, dropping a couple of hundred points from the close high on Monday after the FOMC meeting in minutes on Tuesday. Economic news concerned these minutes, oil hikes and the return of Eurozone concerns, with Spain and Portugal placed firmly in the naughty seat. Spain's budget minister said that the country is in a critical situation, with their jobless claims rising 0.8% in March to 4.75 million. They also held a poor auction, with 5-year credit default swaps on the rise, whilst Portuguese yields spiked after a debt restructuring treat by PIMCO's growth, showing the power of social media. A joint EU and ECB report states that contraction in Portugal is likely to be more pronounced than thought, now projected at 3.25%, and with debt predicted at 115% of GDP in 2013, deeper labour market reforms may be required. However, Italy's industry minister ruled out additional budget cuts, saying that austerity alone will not produce growth. The continued Iran oil embargo has led to Iraq oil exports hitting the highest level since 1980, when the Iran-Iraq war commenced. Brent crude spiked up to $126 per barrel before receding, whilst concerns remain in the UK over a potential fuel tanker strike, with unions negotiating better terms for its members. The major market impact came from the minutes of the FOMC meeting, with both equities and metals selling off, whilst the dollar strengthened off the news. The headline was that no more quantitative easing is required unless growth slows as global markets ease and labour market conditions improve. ADP non-farm employment figures out Wednesday showed employment levels improved by 209,000, backing up this from the ISM. However, their manufacturing figures also showed expansion, which should add to recovery. However, it seems comment rather than data seems to have been the driver, with the market dropping after the ISM stated that fuel prices are affecting services and that they are unsure that employment gains are sustainable. It appears that QE thus is still a possibility in the near future. Equities were quiet aside from the general sell-off, with mining stocks and banks seeing the biggest fall. CVC Partners said that there would be no offer for MISIS, whilst the bid situation surrounding cable and wireless worldwide continues to drag on, with the deadline further extended. James Murdoch resigned as chairman of B-Sky-B after all the broadcast issues surrounding Murdoch's and the News of the World hacking scandal. And in America, analysts have placed a $1,000 price tag on Apple, with the company now worth more than $500 billion. Now on to tomorrow and next week. UK equities are closed tomorrow and also on Monday, but the US does not observe Easter Monday. Non-farm payroll is out tomorrow, but no equities are open this side of the pond or the other. It's just the future contracts. And next week we see G7 meetings all week, whilst Australian employment figures and the American trade balance and employment data are out Thursday. On Friday we have China's GDP and US inflation figures. After the surge in oil and after the previous figure, it will be interesting to see what effect the crude oil inventories have on the black gold. A limited amount of companies report next week, but ones to watch are Vedanta Resources, Michael Page International and Flybe Group. The only Dow Jones company to report are Alcoa, who release figures on Tuesday.